Hello, welcome to your update on the NDX, the NASDAQ index on the daily time frame. We're still tracking here I'd say two possible pathways, or rather three, and all of them still allow for some further upside. The nearest support area, and again, we are viewing this here as a fifth wave to the upside, probably the late stage of a very, very long bull run. Okay, and this, the chart could form a top soon in this region here. But for now, there is no evidence for a meaningful top. And what I want to do in this video is to explain the daily chart and to explain what the support levels are, because I have three categories of support which are now relevant depending on which scenario we are looking at here. The most directly bullish scenario is the white scenario, in which I'm tracking here from the April low an ABC structure to the upside. What is kind of unusual about this is that the move to the upside hasn't, there hasn't been much structure. So from a technical analysis point of view, yeah, it's quite simple to simply, simply follow the trend up. However, it's not given us much structure in the sense of any landmarks, really, deep pullbacks or anything that would give us some clarity. So I have to work with what we've got here, and the direct move to the upside has been quite aggressive. So it's a bit more speculative. That's why we have three scenarios, not just two, which makes it a little bit tricky. But in this most directly bullish scenario, in this white scenario, we might be in the late stages of the third wave here. So we're basically in circle wave 5 of wave 3. For those of you who are following the futures chart as well, you know that I'm also tracking here the micro patterns to the upside in circle wave 5. That's the white scenario. In this scenario, ideally the price holds above 22,547. It's entirely possible even that this fourth wave bottomed here. It's a bit difficult to track the micro, but that really has only an impact on the micro. From a structural point of view, it doesn't really matter so much whether the wave 4 bottomed here in August or here a little later in August, yeah? So in this scenario, the market could move higher towards 25,540, maybe even 27,000 in quite a direct fashion. That would be a nice year-end rally scenario, because that could carry on for a bit, yeah? It would be important in this case not to get a decisive break below 22,547. Now then, let's take a look at the yellow scenario there. In this scenario, the price is likely in a deeper pullback. That's the scenario. It just depends on how we interpret the bigger picture, larger time frame. In this yellow scenario, I can view this move to the upside as a 5-wave move. And if that's the case, and again, that's all comes down to how I interpret the larger time frame. Both interpretations are possible. The main takeaway here is, it's not so much about getting the perfect count. It's about understanding what the levels are, the pivots, and which scenario is likely in play. The second support area for the yellow wave 4, it allows for a deeper pullback, is this one. Yeah, it's a little lower. It's a little lower. I'm just going to adjust here slightly the levels. So this is yellow wave 4 support. And this is white wave 4 support. And so in this particular scenario, so yeah, if I'm tracking this correction, then it should really not break below 21,276. So it means it's possible that we're now topping there in a B wave and we're coming down in a C wave. What we can track here as well is Fibonacci resistance for wave B. And we're now there, right? We're exactly at Fibonacci resistance. Just highlighting this because this is a key spot for yellow wave B to form a top. So if we now see a break below this last swing low there from the 20th of August, that could be a confirmation we're moving down in yellow wave 4. It doesn't need to be massive. Yeah. It doesn't need to be massive because the wave 2 also wasn't massive. And then lastly, if the price cannot find support there even, that is when a deeper pullback is underway. All of this is not bear markets. I mean, people would call it bear market, but people also call this bear market here, right? Because it dropped more than 20%. Obviously, it wasn't. It shows you how, well, not very useful kind of those kind of 20% guidelines are. But if we I mean, going down here would be another 20% roughly, right? That wouldn't necessarily bear market. For me, it's more about structure. As long as pullbacks remain corrective and we kind of hold this support area I'm going to show you now, I wouldn't call it really bear market. So this would be the larger support area below for a deeper B wave pullback. That's if we can't find support in the yellow wave 4 support area. And honestly, already 17,920 would be deep. In this B wave, ideally, I'd say it doesn't even break below the 61.8 fib. So 19,000 area basically, right? So if we can't find support in yellow wave 4 support, it'll likely drop in orange wave B. All of those would still be opportunities for another rally. For now, I'm quite neutral between white and yellow at the moment. We just simply don't have enough evidence for orange. Orange might seem bearish, but it's actually probably the most bullish one because it allows, after a deeper pullback, for the indicators to reset and then a larger rally in wave C. But we haven't even broken below upper micro support, right? So that's just for the overall larger time frame perspective here. Hope that gives you some clarity. Also, when I'm tracking the futures charts, which basically just are zoomed in, right? So that gives you a good idea of the context. Thanks so much. Bye-bye.